Okay, let's unpack this. We're dedicating this deep dive to one of the most dynamic platforms out there right now.
The big one, yeah. The Gaming and Experience platform. Their Q3 2025 earnings just landed.
Exactly. So we've gone through the earnings call transcripts, the investor slides, all the supplemental stuff.
Right, and our mission really is to give you the shortcut to understanding what's going on. This explosive growth, users, creators,
And how they're deliberately trying to attract an older audience, which is fascinating.
and also why the financials look a bit, well, counterintuitive at first glance. We need to get into that.
Definitely. But first, the big picture context. Their stated goal, their ambition, it's huge.
It is. They're aiming to capture 10% of the entire global gaming content market. 10%.
That's a massive target.
Sure.
So how are they tracking against that based on these Q3 numbers?
Well, they estimate they hit about 3.2% of global gaming bookings or revenue this quarter.
Okay, 3.2%. And where were they before?
Just last year, Q3 2024, they were at 2.3%. So you can see that trajectory is definitely accelerating. They're moving faster towards that 10%.
Right, acceleration is the key word. Let's start with the scale then, because the user numbers are just, well, staggering.
They really are. Daily active users, the DAUs, hit 151.5 million in Q3.
151.5 million, and the growth rate.
That's up 70% year over year, 70%.
Wow. But as you mentioned, it's not just the overall number that's catching everyone's eye, is it? It's the demographic shift.
Exactly. That's where it gets really interesting for anyone watching the space. For so long, people associated the platform mainly with kids, the under 13s.
Right, that was the perception.
That perception is rapidly becoming outdated. Things are changing dramatically.
How dramatically are we talking?
Okay, get this. DAUs aged 13 and over grew 89% year on year.
89%, so much faster than the overall 70% growth.
Significantly faster. And the result is that now 2/3, 2 out of every 3 daily active users are 13 or older.
2/3. Okay, that's a fundamental shift.
It completely changes the game, doesn't it? New content possibilities, different monetization strategies, opens up a whole new competitive landscape.
And this isn't just happening in one region, right? The growth seems pretty global.
Absolutely. The filings show huge international growth. APAC, for instance, grew 108% year over year. Just massive penetration there.
108%. But what about more established markets?
Even there, like the US and Canada, growth was still really strong, up 32% year over year.
So it shows deeper engagement even where they're already well known.
Exactly. It's not just new markets. They're getting stickier everywhere.
So what's pulling all these users in? The documents kept pointing towards viral content, these massive hits.
Yeah, that's sort of their superpower, isn't it? This ability to generate virality. They highlighted 2 experiences this quarter that just hit unbelievable numbers.
Oh, like what?
Well, first, there was Grow a Garden. Sounds pretty chill, right?
Yeah, like a simulation game maybe?
Right. In July, it set what was then a world record peak concurrency for an experience on the platform. Nearly 22 million people playing at the same time.
22 million concurrents in one game.
Uh-huh. But then, later in the quarter, another one, Skill a Brain Rot, smashed that record.
Okay, Steal a Brain Rot sounds different.
It apparently hit over 25 million concurrent players.
25 million. That scale is hard to grasp.
It really is. I mean, think about it. The peak concurrency for the entire platform in August was 45 million users.
So these single-hit games are attracting more than half the platform's entire peak user load.
When they peak, yeah, it shows the power of this ecosystem. A piece of content can just explode out of nowhere.
But it's not just about these blockbusters, right? What about the smaller stuff, the long tail?
That's crucial too. The documents showed that engagement outside the top 10 experiences also grew really nicely, up 58% year over year.
And spending. Did people spend money in those smaller games too?
They did. Spending in that long tail grew 40% year over year.
So that shows the broader ecosystem is healthy, not just reliant on a couple of mega hits.
Exactly. And that health in the long tail is proof that their whole creator economy strategy is working. It means more developers are actually earning something meaningful.
Which keeps the pipeline full of new, potentially viral content.
Precisely. It feeds itself.
Okay, so let's talk more about those creators. With this scale, what does it actually mean for the people building these experiences?
Well, fundamentally, it means more money in their pockets. Creator earnings topped $1 billion in just the first 9 months of 2025.
$1 billion in 9 months. Wow.
And the pace is picking up. DevEx, that's the Developer Exchange Program, how creators cash out their virtual earnings into real money, that's grown 250% compared to the same period just 2 years ago.
250% growth in payouts over 2 years. That's substantial.
Hmm.
And didn't they also announce a direct increase to the payout rate itself?
Yes, they did. A pretty significant signal. They bumped the DevEx rate by 8.5%.
Okay, what does that translate to in real terms?
It moved from $3.50 to $3.80 per thousand Robux earned. And that kicked in on September 5th, 2025.
Why is that 8.5% bump so important right now? What signal does it send?
Well, think about where that money comes from. It comes directly out of the platform's share, their take rate.
Ah, okay, so they're choosing to give a bigger slice of the pie to the creator.
Exactly. It signals they're prioritizing keeping creators happy, encouraging quality content, ensuring that long-term supply
Right.
over just maximizing their own margins in the short term. It's an investment in the ecosystem.
Makes sense. They also launched something called the IP platform. That sounds interesting.
Yeah, this is potentially a really big deal. It's designed to connect major intellectual property holders. They mention brands like Mattel, Kodansha directly with the creators on the platform.
So bridging the gap between big brands and the individual developers, how does that work?
It basically standardizes and automates the whole process for creating branded content or using licensed IP.
Instead of custom deals every single time?
Right. Before this, if a creator wanted to use, say, a Barbie character from Mattel in their game, it meant complex, one-off legal contracts negotiations. Very slow and expensive.
Oh.
Now, this IP platform aims to provide a standard, scalable framework. So a creator can more easily license and integrate that IP, speeding up the creation of branded experiences dramatically.
That could unlock a lot of new content types. But supporting all of this, 150 million users, complex games, creator payouts, requires massive infrastructure, right?
Yeah.
What are they building technically?
Yeah, the tech roadmap is critical, especially for enabling those more mature games they're targeting. They talked about rolling out things like server authority.
Server authority, what's that crucial for?
It's absolutely essential for competitive multiplayer games. It basically means the server is the ultimate source of truth about what's happening in the game, which helps prevent cheating.
Ah, okay. So vital for shooters, sports games, racing, the kind of stuff that appeals to that older 13-plus audience they're growing.
Exactly. And they also mention custom matchmaking. You need sophisticated matchmaking to create fair and engaging competitive experiences. You can't just throw everyone together randomly.
Right, and they needed the raw capacity too. You mentioned that 45 million peak concurrent user record in August. How do they handle that kind of load?
It takes serious engineering. They run a hybrid setup. They have their own bare metal data centers, their core infrastructure, edge locations, specialized GPU servers.
But they also use cloud providers.
Yeah, they burst into the cloud. They use partners to get extra capacity during those peak demand periods like weekends or when a huge game goes viral. It gives them flexibility.
You mentioned edge data centers. Can you explain for the listener what an edge center does and why it's important for global growth?
Good question. So edge data centers are smaller facilities located strategically closer to where large groups of users are, but maybe further away from the main core data centers.
Okay, so closer to the players. What's the benefit?
The main benefit is reducing latency, or lag. The physical distance data has to travel matters. By putting compute power closer to users in, say, South America, you make the experience much smoother and more responsive.
And they specifically mentioned adding one somewhere.
Yes, they called out adding a new edge data center in Brazil. That directly helps improve the experience for their massive and rapidly growing user base there, especially for those competitive games where low latency is key.
Makes sense. They also touched on improving the visual quality, the fidelity, without leaving people on older or cheaper devices behind.
Right, that's a constant balancing act for them. Technologies like Harmony and Slim are focused on this.
Harmony and Slim, what's the goal there?
The goal is to enable developers to build much higher fidelity, better-looking experiences, but in a way that can still scale down and run effectively on a huge range of hardware.
So from a low-end Android phone with maybe just 2 GB of RAM,
all the way up to a high-end gaming PC with a powerful graphics card. That ability to run everywhere across potentially billions of devices is absolutely core to their strategy for hitting that 10% market share goal.
Okay, let's shift gears now to the financials, because as you said, this is where things can seem a bit confusing. The bookings paradox.
Right. You see this incredible user growth, 70% DAU increase, viral hits. You'd expect profits to soar, right?
Yeah, but the headlines around net loss and adjusted EBITDA maybe didn't look as positive. Why is that?
This all comes down to the crucial difference between bookings and revenue for companies selling durable virtual goods. It's accounting, but it's really important to grasp.
Okay, break it down for us. Bookings first.
Bookings are basically the cash register ringing. It's the total value of virtual currency purchased by users during the quarter. It reflects the immediate sales activity and cash coming in.
Got it. Cash in the door and revenue.
Revenue, specifically JAP revenue, is how accountants recognize that income over time according to standardized rules.
And for this platform, the difference between the two was pretty stark in Q3.
Extremely stark. Bookings grew that massive 70% year over year, hitting $1.921 billion. Pure sales power.
Almost $2 billion in bookings.
Okay.
But the gap revenue growth.
Only 48%. Still good, but much lower than the bookings growth.
So why the big gap? Why is revenue recognition slower?
It's because of the nature of what people buy. When a user spends Robux on a virtual item like a hat for their avatar or a special tool in a game, that item is considered durable, it lasts.
Okay, it's not consumed instantly.
Exactly. So accounting rules say you can't recognize all the revenue from that sale immediately. You have to spread it out or defer it over the estimated average lifetime of a paying user on the platform.
Okay. And they actually state that estimated lifetime.
They do. In Q3 2025, that estimated average lifetime was 27 months.
27 months.
Wow.
So let's say I buy a permanent virtual sword for $27 today. They get the $27 cash booking now.
Right. But they only recognize $1 of that as revenue this month. The rest is deferred and recognized gradually over the next 26 months.
Okay, I see. And when growth is accelerating as fast as it was this quarter, 70% bookings growth, that mismatch becomes much more pronounced.
Precisely. You get this huge wave of cash coming in, bookings, but the revenue recognition lags significantly behind because it's tied to that 27-month lifetime.
But the paradox gets even deeper, because costs don't get deferred, do they?
That's the key. The major operating costs paying creators through DevEx, staff salaries, building and running those data centers, those are recognized immediately in the period they occur.
So immediate costs hitting the books, but the revenue related to the activity driving those costs is spread out over 27 months.
Exactly. And that is why, counterintuitively, the super fast growth in Q3 actually caused the consolidated net loss to increase year over year and adjusted EBITDA to decrease.
It looks like profitability worsened, even though the underlying business activity was booming.
Correct. The optics on the GAAP P&L looked challenging during periods of rapid acceleration like this.
So where should people look to see the real underlying financial health?
Cash flow, that's where the strength shows up, because it captures the immediate bookings inflow.
And how did cash flow look?
Very strong. Free cash flow guidance for the full fiscal year 2025 was raised. They're now projecting between $1.14 billion and $1.17 billion.
Which is up, right?
That's up 79% to 83% compared to the previous year. So the cash generation is incredibly powerful, reflecting that bookings boom.
Okay, that clarifies the financial picture a lot. Now, looking forward, what was the tone regarding 2026?
The messaging was a bit cautious. They acknowledged they'll be facing tougher year-over-year comparisons after this period of explosive growth.
Setting expectations.
Right. But they were very clear that the long-term objectives, especially that 10% market share goal, remain unchanged. And a big part of that long-term vision seems to be built on data and AI.
Yeah, they mentioned some incredible numbers there, too. Something like 30,000 years of data.
30,000 years of human interaction data, yeah. It sounds like hyperbole, but it represents the cumulative time users have spent interacting within their experiences.
Why is that specific type of data so valuable? It's not just playtime, right?
No, it's much richer. It's proprietary data, PII compliant, so it respects privacy, but it details how users interact with each other, how they create things, how they navigate virtual worlds, solve problems. It's behavioral data at an immense scale.
And that's different from the data used to train typical AI models.
Very different. Generalized large language models, LLMs, are trained mostly on text and images from the public internet. This is unique, dynamic, interactive data that's very hard for anyone else to replicate. It's a potential moat.
So how are they using it now, and what are the future plans?
Right now, it's used internally for things like improving safety systems, making content discovery better, personalizing experiences. But the future applications they hinted at are pretty ambitious.
Like what?
Like enabling unlimited creation. Using AI trained on this data to allow users to generate complex 3D objects, maybe even entire worlds, just using natural language prompts. and also creating much more sophisticated NPCs, non-player characters, that users can interact with in more realistic and dynamic ways. They mentioned a tool called Rogard for LLM-based text generation is already being rolled out.
Okay, shifting from creation to monetization again. Beyond users buying Robux, what's the latest on their advertising strategy? They seem to be moving carefully there.
Yeah, definitely cautious, but optimistic long term. They're clearly prioritizing the user experience and not wanting to flood the platform with intrusive ads too quickly.
So what forms are taking shape?
Rewarded video ads, where users watch an ad to get an in-game benefit, are now in limited general availability. They said over 140 creators were using it.
Okay, a slow rollout. What about ads that drive traffic?
Those seem to be gaining more traction. Native ads that creators can use to promote their own experiences. About 18,000 creators used those in Q3, which was up 27% from Q2. So creators are seeing value there.
Got it. And finally, no company operating at this scale avoids legal issues entirely. Did the filings highlight any major ongoing legal risks we should be aware of?
They mentioned a couple of key ongoing cases, which you'd sort of expect. There are consolidated class action lawsuits known as Colvin Gentry.
What is this about?
They relate to allegations that minors were using third-party virtual casino sites to gamble with Robux. The claims proceeding are mainly around negligence and unjust enrichment.
Okay, so platform responsibility issues. Anything else?
The usual copyright stuff. There's a suit, Robinson v. Bonello, related to alleged use of copyrighted music within a popular experience called Meep City.
Right, music licensing is always complex in these environments.
Exactly. So claims for direct and vicarious copyright infringement are moving forward there, and the company stated they are vigorously defending against them. Standard operating procedure, really.
Okay, so let's wrap this deep dive up for you, the listener. What are the absolute key takeaways from this quarter?
I think number one has to be that fundamental demographic shift. This platform is successfully aging up. 2/3 of users are now 13 plus in Crute, changing its identity.
Right. Takeaway 2.
The aggressive investment in the creator economy. That DevEx rate hike, the $1 billion plus payout, the new IP platform, it shows a deep commitment to fueling content creation over just short-term profit.
Third takeaway. The tech investment is real and targeted. Building out infrastructure, edge data centers like the one in Brazil, server authority, custom matchmaking, all aimed at supporting those more competitive, high-fidelity genres for the older audience.
And fourth, crucially, you absolutely have to understand the bookings paradox. Rapid growth means bookings and cash flow can explode upwards, while GAAP net loss and EBITDA might look worse temporarily due to that 27-month revenue deferral. Look at the cash flow for the underlying health.
Absolutely. So the platform is currently sitting at just over 3% of the global gaming market, but they're aiming for 10%. Given all these moves, the infrastructure, the tech for competitive games, the older audience.
Yeah, the really provocative question we want to leave you with is this. What does this platform actually look like when or if it hits that 10% market share goal?
Having fully embraced this older demographic and these high-fidelity competitive experiences.
Will it fundamentally reshape what we even consider a core gaming experience? What kind of new genres or categories might emerge as dominant on a platform like that? Something to think about.